So good afternoon and welcome to the latest of our series of webinars. Today we're going to be covering key areas to help make your business more environmentally friendly. We'll start with some introductions.
Hi, thank you. My name's Sam Skyring and I'm the Group Training and Communications Manager.
And I'm Darren Moore, I'm Group Commercial Director. And we both represent the Taxis Group. Just for a bit of background, you may be clients, you may not be clients, but for those that aren't, Taxis are a network of accountants across the UK. We run out of about 380 locations and look after about 80,000, mostly small business clients. So we're coming at this from the perspective of that network and things that we've seen and aware of across the UK. And Sam and I both work in the support centre and sit here and support all of our accountants across the UK in different matters. Just a quick disclaimer about today. We are going to be speculating about a few areas. We're going to give you a few examples. What we're not giving today is clear advice. Advice is always based around your particular circumstances and needs, but we're trying to give you at least an overview of a subject. So please do bear that in mind as we go through. So what are we going to be covering? It's a difficult one to cover, this as a topic, but a very interesting one. We don't want to be political here as such. We don't want to take a moral viewpoint necessarily. We all have our own views on environmental awareness and what we should be doing as individuals and as businesses, and that's not for us to comment on necessarily. What we do want to cover are those things that we think accountants can help you with, those areas that are particularly relevant to what accountants do. They can help you with either directly or indirectly. So the two areas we're focusing on today are vehicles and the broader subject of a paperless environment and what that can mean and how that can be achieved. So two quite different but quite broad topics. We will be open for questions at the end, so please do use the chat facility if you need to, and we will be recording this webinar so you can go back and revisit down the line if you need to. So I'm going to start with vehicles and just a quick talk through on vehicles because there are increasingly some attractive tax reasons to have certain types of vehicles and some very good environmental reasons as well. So I'm going to talk about electric and or hybrid vehicles as a start point. So ever more news about these types of vehicles and you'll see them in the press quite often, and you'll see them on the roads far more often these days. So I'll start with an electric vehicle. So what is an electric vehicle? It is very simply a vehicle that runs purely off electric power and is recharged and never using an internal combustion engine, never using fuel. It's important to understand that because a lot of the tax breaks, a lot of the legislation refers to electric vehicles. So it's just important to define that at the outset. Despite the fact I think there's some confusion out there around different types of vehicles, and there's some different references made in the media and elsewhere. An EV, an electric vehicle, is purely one that runs on electric and is recharged and nothing else. I'm going to contrast that with hybrids, which are the other types of vehicles that are mentioned in these references to environmentally friendly vehicles. So hybrids are those that have a combination of electric power and an internal combustion engine. And typically, at the moment at least, there are two types of hybrids. There's a self-charging hybrid, which uses that internal combustion engine to recharge the battery. It's not a recharge basis. And you've got plug-in hybrids, which are around having an internal combustion engine with a battery on board, which is recharged through a recharging process, whatever it may be. So two different types of hybrids. Again, important to understand those distinctions because that relates to some of the advice that we'll subsequently give. A common question asked of accountants is what should you choose? The answer is, as is often the case, it depends. It depends on lots of things. We will talk about some of the tax implications, and Sam will come on to that in due course. The reality, of course, is that we're all drivers, or certainly the vast majority of us are drivers. I've got a vehicle. I'm considering an electric vehicle myself at the moment. So what do I go through as a thought process? Probably what we would all do, whether we're looking at it from an individual point of view or as a business perspective. I'd look at the tax consequences, of course, but I'd also look at some of the practicalities. So what sort of journeys am I making? Where am I traveling? Do I still need to travel? How many miles does that involve? It's actually quite important in the context of electric vehicles because of range anxiety and the limits over range, which does still cause concern for many, although that's becoming better over time. And certainly from a hybrid point of view, it has a big impact because typically hybrids very efficient over short distances because they use primarily electric power, far less efficient over long distances because they tend to revert to their fuel power engines, and they're dragging along battery weight, so they tend to be relatively inefficient compared to their counterparts. So that decision about what you choose is a personal decision, but it's very much based around how you're going to use the vehicle. So that's something we will have to consider. Tax will be a part of it, as I say, as we'll come on to. So costs involved, quite simple really. You've got the price of a car. And generally speaking, electric vehicles are more expensive. That's largely around the battery technology and the price of batteries, which is still quite high. And there are less grants available now. They've reduced the level of grants available for electric vehicles fairly recently, which has made them in real terms a little bit more expensive. The other key figure there probably is the cost of ownership. It's not just about the price you pay, it's about the depreciation of vehicles. And electric vehicles, generally speaking, have not held their value quite as well as their counterparts in recent times. And that's about concerns over battery life and the length of that battery. And manufacturers are trying to deal with that by bringing in guarantees around 8-year battery life, that sort of thing. But that's an important question. It's not just the upfront cost, it's the cost of ownership, which is really the depreciation you'll suffer on that vehicle over a period of time. And the finance deals that you'll typically be looking at, sort of contract hire PCP deals, are a little bit more expensive because of that fear over residual values. So that's a big part of the cost. You've also got the running costs of the vehicles to bear in mind. So you're going to have to charge the vehicle. Now that means that you'll either have a charging point that you'll access in the public domain, which can be difficult, or typically you'll have a charging point at home or in your business premises. And charging points are coming down in price all the time. Tesla, for example, I know have some deals on charging points if that's your choice of electric vehicle. But there is still a cost there. And obviously there's then a cost of that ongoing electricity supply. Again, there are different suppliers out that can help you with that. And then you've got the running costs over and above that. So you've got service costs, maintenance costs. Generally speaking, again, there's a slightly higher cost for electric vehicles because of their still relatively specialist nature, changing over time as they're more on the road, but they're still a little bit more expensive to run. So on the cost side, you could argue that there's certainly some reasons to perhaps not choose them, albeit the environmental issues obviously count against that. The big question that we're asked as accountants is, what are the tax implications? And that's actually where the balance is probably tipped for many back to electric vehicle or hybrid ownership, because there are some pretty significant differences over time around how those tax benefits and benefits in kind, as Sam would explain, work. So important you understand that, because that may well make the difference when you look at the overall cost, if you like, of running a vehicle. Other things to consider. There's a few things to think about there. Okay, you can look at the financial consequences of any decision in terms of what it means in pounds and pence, but that's not always the answer for people. There are other reasons why you may want to have an electric vehicle. There are other reasons why you may want your business to be environmentally friendly. It could be about your own values and beliefs. It could be about the way you want to represent your business to the outside world and being seen as that green-based business that can embrace that and bring it into their business. So that's a really important factor for many. Also worth thinking longer term. The government is committed to phasing out internal combustion engines, petrol and diesel vehicles by 2030, I think it is, and move to electric. Now, will that happen? We'll see. But there is clearly significant momentum now between that long-term need to move to these types of vehicles. So that may be something that tips the balance for you, because you may think, look, we're heading in that direction anyway, so now may well be the time. Think about, obviously, the type of vehicle you need. Many businesses would look at a van, not just for tax reasons, but obviously practical reasons in terms of space and how you're going to use it. And cash flow is a factor as well in terms of the overall cost. And that's, again, a question accountants are typically asked, what would it cost me? Because you've got options around buying or leasing, and they tend to have different tax consequences depending on what you do. That's that. And the final point there, which I think I've already referenced to, can you find ways to reduce your mileage? My personal experience, my mileage is reduced hugely, of course, over the last 12 months. A lot of us are in the same boat. Do we need vehicles in the same way? Are we going to be working remotely more often? Can we run our businesses differently? We certainly do. It's another thing to think about when you're looking at your vehicle options. So, quick intro into the concept of electric vehicles. We'll come back with some wrap-up points later on. I'm going to pass over to Sam to talk about some of those really quite important tax points.
Lovely, thanks, Darren. Yeah, so we're going to look at some of the tax consequences. Now, again, as Darren said, this is very much an overview, so I will explain things as much as I can as I go. So some of the general rules. Generally, looking at the face of things, cars attract fewer reliefs than vans. Vans are considered, because of their design and nature, they're always going to be seen as more sort of for business. Cars historically always have that attractiveness because they can be used personally, and as such, there's obviously this not as many reliefs that you can benefit from with cars compared to vans anyway. VAT. So for those that are new or unfamiliar, that's obviously the value added tax that we pay on sort of any goods and services. But generally VAT is not reclaimable on cars. Doesn't matter if it's electric or not, doesn't come into it. It's just the fact that if it's car, generally not reclaimable. Vans, you can, and there is this sort of a little bit of relief for leased cars. You could potentially reclaim 50%. Again, it's just something to bear in mind. I can't stress this enough throughout all of these rules. You need to be speaking to your accountant before you make any vast decisions, because there are these slight differences and quirks. And as we all know with the government, sometimes it's not always straightforward and easy to understand. So let us make sure that you know exactly what you're looking at in relation to these situations. Capital allowances. Now, if I just bring up this chart. With capital allowances, what these are is this, again, is a bit of an accountancy quirk, if you will. Now, most people, they think of, right, well, I'm running my business, therefore any money I spend, if it's related to business, I must therefore get relief on. To a degree, that is correct, and that is the general rule. However, when it comes to what we call assets, and any type of vehicle will be classed as an asset, what you're not allowed is you're not allowed that initial deduction because it's classed as an asset, okay? So you don't get it off your profit and loss account, your income and expenditure. But what you get in replace of that, of not getting the full relief of whatever you paid for that, is you get what we call capital allowances. Now, depending on, and again, I'm just going to focus on cars on this slide. We'll have a look at vans in a moment. But with cars specifically, what this is telling you is if you look at the chart on screen, you can see that for a pure electric vehicle, what you would qualify for capital allowances is what we call 100% first year allowances. That's what that FYI stands for. That basically means that whatever you pay for the vehicle, you're going to get that relief in capital allowances. So it's if you got that initial deduction based on what you've spent. Okay, so hopefully nice and streamlined there. Also, if it's a new vehicle and it's got 0 emissions, you would also qualify for 100% FYA. So that's the government trying to reward people for actually, if you do buy electric or 0 emissions car, actually we're going to give you full relief in the year that you buy it. That's what that equates to. And you can see there for new cars where the CO2 ranges from 1 through to 50 grams per kilometre, then you can see that actually you're going to get relief at what we call 18%, but that's 18% writing down allowance. All that means, in short, is that you're going to get 18% in year 1, and you're going to get 18% on the reduced value every year, so on and so forth. If the car has more than 50 grams per CO2, then you can see that writing down allowance goes down to only 6%. So again, it's getting reduced. So actually, the higher the CO2, the less relief you're going to get for it, and it's going to be spread over a very long period. And then you can see at the bottom, obviously for used cars, you can see there you've just got those two differences. You've got the 18% writing down allowance and the 6%. You don't have the 100% first year allowance in there. Okay, so just bear that in mind as when the relief goes. Now again, it's not the easiest of concepts to explain. There is obviously some relief there, but it is very marginal, it is spread out. So do speak to your accountants and they can go through it in more detail. For vans, it is a bit of a different story. So for vans, for one, in this realm of capital allowances, vans are actually classed as plant and machinery. It seems a bit odd, but they're classed as part of your work, you know, essential to your work, especially if you've got, you know, large goods, things to transport. It's considered a bit of core machinery. As a result of being classed as plant and machinery, you actually get what we call annual investment allowance. And basically that means you get 100% of the relief in year 1 up to a certain cap each year. Okay, and I believe at the moment it's, is it $1 million still?
For small businesses.
Yeah, so for $1 million for small businesses. So there's obviously hopefully plenty of scope there for if you're looking at a van. But also, even if AIA wasn't available or you've used it all up, etc., because it is a van, it's classed plant machinery, in the main pool, regardless of the type of van, you would get 18% writing down allowance. So it is more generous than cars. Now, obviously we've been looking at the two differences there. Oh, sorry, gone too far. Just looking at the slightly different quirks between what we call unincorporated businesses, so that's your sole traders, your partnerships, compared to limited companies, which we'll talk about in a moment. So with unincorporated businesses, a thing to remember is regardless of the allowances, whether it's capital allowances or the running costs, anything going through the income and expenditure or profit and loss account, looking at all those costs as a whole and those reliefs, you have to disallow what we call private use. So what that means is you have all those costs in there, but you have to strip out anything that is as a result of the vehicle being used privately. Okay, so you basically have to look at your mileage, look at how often you use the vehicle, look at that sort of split and be able to, you know, with some calculations, be able to satisfy yourself, well, actually, I use my vehicle 80% business, 20% private, in which case you then disallow 20% of all those costs and reliefs. Another thing to mention is that ordinary commuting is actually classed as private. Okay, so just bear that in mind, okay, because a lot of people think, oh, well, actually, I'm just travelling to and from my workplace, that must be fine. No, that's classed as ordinary commuting and therefore not allowable. It is to try to make it the same as if you were an employee and you had one place of work. That travel isn't allowable. For a limited company, there's a few more things to think about. So as a limited company, again, quick snapshot, a limited company is a separate legal entity. So if you own a limited company, you will most likely be owner and director within that limited company. The owner is the shareholder, the employee is the director. So you're basically employee and owner, okay, if you have a limited company. What will happen is, again, there's these similar sort of rules about private use. And basically, within a limited company, as your role as an employee or director, if you use it, the vehicle privately, it will trigger what we call a P11d benefit. Okay, now there are different rules within the benefit realms of, again, depending on if it's a car or a van. Again, generally speaking, cars will attract a much higher rate benefit and therefore you'd pay more tax on a car compared to if it was a van. Van are generally more tax friendly, if you will. Ordinary commuting is classed as private use, but for cars only. Okay, a very peculiar quirk. With vans, travel to and from a place of work is not considered private use, so you don't have to worry about. And also within the van rules for benefits, it actually looks at and goes as far to say, actually, if you only use the van for an insignificant amount of private use, then actually we're not going to worry about it. It doesn't count. But you don't have that with cars. So it's if you use it at any point privately, you're going to be within the realms of the P11d taxable benefits regime. And you can see there, lastly, that generally the rules, especially for cars within the benefits regime, is the higher the CO2, the more it's going to cost you. Okay, so again, it's that encouragement towards the lower CO2 emission cars, the electrics, the hybrids, that actually you potentially pay less tax. And generally how the calculation works for cars is a very broad spectrum, is that it looks at the list price of the car when new. Doesn't matter if it's a few years old, you always have to take the price when new, when first registered, and you multiply it by a percentage given by HMRC, and that percentage is dictated by the level of CO2. Okay, so, you know, just things to bear in mind, and it can be quite expensive. Obviously, vans, if you still trigger the benefit, there is a taxable consequences, but HMRC give you the figure. It's nowhere near what some of the cars are, so worth bearing in mind and factoring that in. So yeah, so hopefully that gives you just a few ideas to think about when, you know, we're talking about all these different vehicles. As Darren said, he'll sort of wrap up towards the end, but there are a lot of tax consequences in relation to vehicles, and I cannot stress this enough. There are so many weird and wonderful quirks that HMRC have in their rule books about what you can and can't do, and what attracts reliefs and what doesn't, and how you tax benefits and what things are classed as, that it is a bit of a minefield, you know, even for us as accountants. The only thing we've got going for us is we do this day in, day out. So it's a lot more familiar with us. So before you make any decisions, even if you think you know what you're doing and you know exactly what you're doing and you think you're getting the right beliefs, please don't rely on what the salespeople tell you. There have been some rather horrific stories of people being misled by, you know, the salespeople off the forecourts, and you think you're buying a van, but actually it's not classed as van, it's actually considered a car, and therefore much higher tax consequences. So please just make sure when you're looking at these areas, especially vehicles, because most of the time we're not talking insignificant amounts of money, they're normally quite expensive. okay, especially electric vehicles in some cases. So please have an idea of what you think you want to do and come and sit down and speak to your accountant. And you can then start getting your accountant to work out all of the different options and the cost consequences and tax reliefs associated with each decision. Okay, so you really can build a true picture before you make that final decision and go hand over that hard-earned cash. Okay, but let's leave cars alone and vehicles alone for now, and let's talk about going paperless. Okay, so what does this actually mean? So in summary, hopefully the clue's in the name. We're talking about reducing the levels of paper within your business. For several reasons. Obviously we want to protect the trees, therefore, we want to save the planet, all cutting down more and more greenery is just adding to this whole global warming effect, and various other situations, on top of all the effects that it has on local populations and local wildlife and everything else that goes with it. Also, it's this shift in, actually, we're in a time now where so much can be done digitally. Okay, we've got digital software for almost anything out there. And don't get me wrong, sometimes you can't beat holding a bit of paper, but it's really just thinking about, actually, this is where my business is now. This is what we're doing. How can I improve it? No one expects anyone to go 100% paperless overnight. It's going to be a change that's going to have to be managed, incorporated, but it's just about everyone thinking and taking those first few steps in that right direction, and it's all going to help. So things like, rather than printing out emails all the time, try not to. Encourage, any emails that you send out, encourage people not to print them out also, just keep them saved somewhere. Requesting invoices or sending invoices digitally, digital pay slips for staff members, etc. So, it's all these different things that you can be looking at to do. Now, as I mentioned, obviously in this digital age, software and technology plays a huge part in this. And again, it can be a bit of a minefield, and especially for the bookkeeping side, your accountants, us, we can certainly help you with that. So, like anything, as I said earlier, there's a software for everything, but it doesn't necessarily mean there's a right software. Okay, so there can be almost so much out there that you end up picking a bit of this, a bit of that, a bit of something else, and it doesn't quite gel, it doesn't quite flow, it doesn't quite work. You need to find something that suits your needs, does what you want to get out of it, and actually makes you hopefully more efficient in the process. Okay, that's what you want out of a software. And I dare say something that is hopefully relatively easy to use, because who wants to overcomplicate things? Okay, so again, with bookkeeping software, there's so much that it can do digitally for you that there's actually, if done properly, you could become paperless, completely paperless. Okay, if you sort of embedded everything, because the software itself is intuitive. You can link up your bank account to it, so information feeds directly into your software. Invoices are generated from that software. They can then be emailed directly to your customers. If it's quotes and stuff you're sending out, your customer can therefore approve that quote on that email, and it gets sent back digitally to you. The client, when they receive your invoice, there could be a link on there that they make payment, and they make digital payment there and then. It can be certain suppliers can email you their receipts and their statements, so they can be fed electronically into your bookkeeping software. And again, there's even software out there to store digital copies of receipts. So although you may be handed that odd till receipt, or you've gone to fill up at the petrol station, you get the receipt from the garage, obviously for VAT purposes you need to keep it. So rather than obviously chucking it in a drawer and it might get lost and therefore you may miss out claiming on it completely, you can actually take a photo of it. And that photographic software, one of the sort of big ones out there is Dext. That will actually store that information for you, so it keeps that picture, but it also pulls out that core information from it as well, and helps to record it in your bookkeeping software. So it can very much become an end-to-end seamless process. Okay, it is a change, but it can actually make you more efficient, and also, because it encourages you to do everything in what we call real time, it arms you to make better business decisions, because you can do them in real time. You're not waiting till the end of the year to push everything together and think, oh, actually, we maybe shouldn't have spent that money then, because that's seriously affected our cash flow and we've now paid X amount in overdraft fees. You know, it's about spotting things in real time, okay? Technology, okay, so it goes alongside with the software. You know, the software will do the bulk, but you still need the technology behind it. So for instance, if you've got salespeople in a shop floor or that type of environment, rather than having a clipboard trying to scribble down notes, why not have a tablet? You know, you can pick tablets up for the most part relatively cheaply now, and it's reusable, you know, and you never risk losing anything because you can set it up so all notes get saved and backed up to the cloud, for instance. Smartphones, you know, again, at the end of the day, when we say smartphone, I don't mean nothing fancy like the latest smartphone out there. I mean a phone that can have a few apps on it and take a picture. And again, some of those can be picked up so cheaply now because of how fast technology has moved on. So that can, again, help with your bookkeeping process and just keep track of things, you know, and also help with your staff, especially if you've got staff that are on the move, they travel, they're out and about, they might not always get back to the office. You don't want to have to keep waiting for them to bring piles of receipts and expenses and this, that, and the other. You want to have everything sent across digitally in real time so you can keep on top of it all. Digital tills, again, if you're in that sort of retail environment, you know, there are tills now that can link up directly with software to streamline that process even further. And again, little things like thinking about, right, well, if we are going to go paperless and we're going to use all this wonderful technology, you know what it's like, you know, if you're trying to analyze, well, you know, that's a photo of that, but I need to put it somewhere in my software. You end up wanting to look at things in several different places, and that can get quite hard, especially if you've only got one screen, because you end up shrinking screens down. It can get quite bitty. So, you know, if you're going to be truly paperless, you know, it's also worth looking at things like dual screens, you know, having two monitors where you can be looking at something whilst doing the bookkeeping, while doing some analysis, while looking at something else, etc. It just will make your lives easier. So it's thinking about that bigger picture in that, yes, we want to be paperless. Yes, we've got the right software, but actually we need the technology behind us to enable us to use it properly. Okay, so it's just bearing those things in mind. Now, advantages, and there are a few things to consider, you know, it is a big change. So some of the benefits, as I've touched on, potentially it's going to save you a lot of time. It will make you more efficient in the long run. It will take a bit of getting used to, but it will make you more efficient, potentially speed up your processes. You can see there you can claim more expenses. Now, what I mean by that is, again, going back to that whole idea of, you know, you get receipts, your staff are out there, they're getting receipts, they get shoved in a back pocket, they get put through the washing machine, you know, all these different things. And that will then mean, because you haven't got that receipt, that proof, that basically is going to mean that expense is unclaimable, because HMRC dictate you need to keep receipts, you need evidence that you've incurred that expense. So, you know, these softwares, especially these photographic ones, they will actually streamline everything, keep it all in one place for you. It never get lost. So it could actually save you money. Okay, it could make, you know, it could reduce your tax down, save you more money in the long run because you're not losing anything. More reliable. Now, I'm going to caveat that slightly because obviously there are humans, you know, using this software. So there's always an element of human error. But for the most part, it does strip away a lot of that unreliability of things getting lost, things going walkabout, things not being saved. You know, a lot of these softwares are designed now to be backed up in the cloud. So actually it keeps track of everything. It keeps an audit log of who's done what, so that if something has gone a little bit awry, you can clearly follow that trail back to see who's did it, maybe have a quiet word, and obviously put things back on track going forward. As I said there, it can make you more tax efficient, and again, just making sure that everything gets claimed, but also going back to that point where, because it's done in real time situations, you can make business decisions that much quicker and reliably, because you've got the actual reliable data in front of you. You're not plucking out forecast figures out of thin air because you don't actually know what the situation is right now. It tells you right there and then. You can run reports so you can see exactly what your cash flow is, what your profit and loss is looking like, what your balance sheet is looking like. You know, you can then be talking to your accountant about what reliefs are available, what you can do in certain situations, all in real time, so you don't miss any opportunities, okay, that could make you more tax efficient, on top of potentially claiming more expenses. It gives you the time to focus on your business. I can't stress this enough. You guys out there running your businesses, there is so much to do and think about, especially under the current environment that we're going through. there's a wealth of information. You're constantly trying to think, 5-10 steps ahead. Where is your business going? Keep your staff happy, keep your customers happy, keep paying your suppliers, keeping everything on track, on top of all of these underlying what I call admin processes that actually integrating software and technology and making that step towards being paperless can actually free up your time once it's fully set up and running to not worry about that stuff. Okay. And then, can't stress this enough. I've said that time and time again, even over the last few minutes, this real-time information, real-time business decisions is key. Okay. It helps you stay ahead of the game, keep planning ahead, keep growing your business, and it, potentially will set you apart from your competitors. So please do really consider this. It can be a massive win for your businesses. But there are, as everything, points to consider. I never like to call them cons or disadvantages. They're not. They are just points to consider. And if done correctly, they can be overcome. So control. There is that control. With any big change in a business, by looking at going paperless, bringing in these new processes, these software technology, it's going to be a learning curve. So as you can see on there, training has to be factored in, absolutely. So the costs of training, how long it's going to take. And then also with all of that, there's this slight element of, because you are changing, sometimes there's that loss of control, okay, that can feel a little bit overwhelming. But, it's like anything, time, persistence, bear with, and you will feel much more comfortable. It is a big change. There's no two ways about it. You're fundamentally changing how you do things within your business. Okay, but as I said, persistence and consistency with anything is key. If you've got staff that are helping you with this, the communication side of things, again, another point to consider with your staff, with even potential customers and suppliers, so they know what's happening, that actually your customer isn't going to receive a paper invoice anymore. They're going to receive a digital one. Talk them through the process, explain why you're doing it. What are the benefits of doing this? How is it going to affect them? Things like, it means that actually we can focus more time on actually servicing you as a customer rather than getting bogged down in the admin side. And then lastly, probably one of the biggest factors is new software, new technology. There is a cost. There always is. I mean, I've no doubt, and I'm absolutely 100%, and it's safe to say that those costs will pay them back in dividends over the years to come because of the time saved and the extra efficiencies and potential tax savings that you may get as a result of that will absolutely pay it back. But to begin with, potentially it could be obviously a chunk of money going out that you're going to need to plan for. Okay, so just think that in and factor those things into things like your cash flows and your budgets. So in relation to this whole going paperless, and these new softwares and technologies, the key point is to plan. As we say, look at what you actually need. There's no point getting loads of different softwares if, they just seem really fancy and the salesman seems wonderful. You want software that you can actually use that's actually going to help your business. We don't want anything excessive. We just need to cover what we need. Okay, so plan, look at the softwares out there, find one that suits your needs, plan how you're going to bring it in. Are you going to do it in stages? Are you going to do it in a chunk? Are you going to run it alongside your existing system to make sure there are no gaps, there's no fallouts? So it's just planning and working out who's going to do what. As I said there, working out the cost is absolutely key. You don't want to put yourself in more debt or struggle for something because you haven't quite planned for this cost to come in. As I said, it will pay back over the years, but you do still have to plan for that initial outlay. So work out your finances, see when you can do it. You might say, well, actually, no, I can't do that this year because I can't really afford what I need to. So actually, do you know what? I'm going to budget that in for next year though. So look at those things. Training. The key to bringing in these new processes and becoming paperless is all down to the training. You want the products and processes to be successful. So you have to obviously roll it out however you see fit, and make sure that everyone is on the same board, because a process is only good as the people that are doing it. And again, coming down to consistency, making sure everyone is doing it the same way. So there's no hiccups and everyone knows how to follow it, etc. Communication. It is a big change. Like I said, talk to your staff if they're going to be affected. You want their buy-in, so you want to keep them posted along the journey. You want to encourage them to be part of the change, not the resistance to it. Your customers and your suppliers, they're going to be affected. You want to encourage things to be done digitally. You need to get that message out to them, explain to them. Again, explain to your customers, well, actually, yes, I want to do it this way. There might be some customers that are a bit digitally phobic, dare I say, that may not like emails and this, that, and the other, but try and encourage them, work with them. There's probably a way that will suit their needs and they would be happy with. And again, explain the benefits. That's going to potentially mean more time with them, never know down the line, new lines, new business developments, anything like that to potentially help your business. So a few things to think about when implementing. But again, it is down to those sort of 4 things: planning, costs, training, and communication. If you can get all that right, then you're on to a winner, as they say.
Brilliant. Thanks, Sam. Lots there to think about, lots of content. So a quick wrap up at the end. So how can we help as accountants? How can we help you deal with some of these actually quite complicated topics? And I think, as Sam's demonstrated, we can help explain how some of these things work and how you can start to go greener by looking at these ideas, but it is very much around your circumstances. So that's always going to be about talking to your accountant, understanding the tax impact, the true costs, because things aren't always clear. And as Sam says, and we've all been there, a sales position is very different to the reality of what it may mean for you and your business. So it's really important to get that advice. We can help you with changes that are coming. I think that's a really important part of our role, and that's what we do for all of our clients. That communication process is vital. Things are changing. The last 12, 15 months has obviously been a classic example of just how quickly things can change. And let's hope that we're now over the worst and we're now on the way to recovery. But there will be changes in the coming years, and particularly around these environmental/green type issues. The government has made some commitments over the next 10 plus years. There are some global commitments as well, and that will have to be reflected in lots of changes. It could be tax, it could be funding, it could be legislation, it could be opportunity that affect you and your business. So make sure that you've got an accountant that's helping you and communicating those changes as they come, because some of them will be clear, others we need a bit of planning for. I've mentioned funding in this slide as well. That's an important point, and it's actually a common question we're asked. Is there funding available for different green initiatives, such as the ones we've talked about? Well, we've talked about the tax position. There is some funding out there, but it's fairly sporadic. So we haven't put a slide up, but just some practical advice, I think. At the moment, the government isn't particularly joined up around funding initiatives. And I think off the back of COVID, it may be a while before that funding position is clear. But for some of their initiatives to work, logically, there will have to be more funding and support at some stage. So stay close to your accountant. I think they can certainly help as a conduit for that. But I would stay close to your local enterprise partnership and probably your local chamber of commerce as well. Good, unbiased providers of access to that type of funding. And it's certainly something I've seen before work locally. And most locations will have access to that knowledge. So just as an idea really of places for you to look at where funding, because a lot of it is local, it can be perhaps focused and can be accessed. So just something to think about. Accountants can obviously help you understand the true cost, as I say, and critically, what are your tax impacts? How's it going to affect you as an individual? How's it going to affect your business? How's it going to affect your take-home pay and what you have to spend month by month? How do you budget for the tax you've got to pay if there's some form of deferral? So all critical questions we can help with, but that's what we're here for. We're here to try and take the pain out of some of these decisions because sometimes they're not easy. So that's something to leave you with. So a fair bit covered. We will come back to questions at the end. Just as a final point, we are open for business. A lot of you will be clients. Hopefully you're talking to your accountant anyway about some of these issues, and you're certainly receiving regular communication, but obviously you know where to go if you've got questions. If you're not clients as yet, we're always open for business, as I say, and we're always happy to have those initial conversations. So all of our accountants across the network will run free telephone, face-to-face meetings if that's appropriate, video consultations in this slightly more remote world we're all living in. But they will talk you through some different ideas. They will talk through your scenarios and give you some thoughts about how they may work for you. They will always work on a fixed fee basis because nobody likes surprises, and they will agree those in advance. So hopefully there's an opportunity to talk to some of you over time. So I think that's probably it from us. I'll just quickly check to see if any questions. I think probably not, and I think we're running out of time a little bit. So if you do have any questions having watched this or after watching the live recording, please do get in touch with your local accountants. Look at our website, www.taxis.co.uk. There's lots of good information there. And we hope to see you again at a future event. So nothing from me, Say?
No, Darren's hit the nail on the head. Yeah, just speak to us. Speak to your local accountants. You know, there's lots of changes coming, lots of things on the horizon, but lots of ways to help you in your business. So just stay in touch.
So we hope that's been useful. Thank you all for joining us or for watching us. Please do stay safe, and we hope to see you at a future event. Thank you.